GDP calculation data is provided by the government. Now, can you see a table in front of you? Correct? Can you see a table right in the slide? Now, please observe the table. If you ask me, sir, should I by heart anything? Should I by heart anything in this table? My answer is no. Please do not by heart. Don't waste your time. But please make observations. Observations. That is basically one. Did we discuss the concept of basic prices? Did we discuss GDP at market prices? Right? Please observe the numbers which are provided. Right? And if you remember the formula which I asked you to by heart, right? Did I not say we basically move from basic prices? From basic prices, we will add product taxes minus product subsidies will get the market prices. Now see, point number one, GVA at basic prices. Just observe, do not by heart. GVA at basic prices. Net taxes on products. Net taxes means this component. The product taxes minus product subsidies. Once you adjust for these components to basic prices, what you will get? Market prices. Look at point number 3. Gross domestic product. Gross domestic product. Then we also discuss the concept of net domestic product, right? How numbers are provided. Please have a look at it. Then I said GDP is generally calculated in case of India as in two methods, right? In the form of two methods. One method is expenditure method, and the second one is production method. Array, that production method picture they have not put. Don't worry. Right, one is expenditure method and the other one is production method. Right, here is a production method and here is a expenditure method. Now please observe. Please observe. Right, in case of production method, they have calculated value addition, they have adjusted with taxes, and they have got GDP numbers. Now please observe expenditure method. Just make an observation. Observe the expenditure method. You have private final consumption expenditure. Do you remember C plus I plus G? Let me know. Do you remember C plus I plus G formula? C is a consumption expenditure by all of us. Private final consumption expenditure. I said it is expenditure done by the firms. And one or two people, right? One of the two students, they basically asked me, sir, you have written I is expenditure done by firms, but you have also written I basically represents fixed capital formation, right? Fixed capital formation. This was the term I've used, right? A fixed capital formation. Please have a look at this. Look at the component 7, gross fixed capital formation. That is I for you. What about G? Government expenditure. Can you see component 6? Government final consumption expenditure. And while discussing this, one or two students asked me, sir, what about companies' expenditure on intermediary goods? What about companies' expenditure on, let's say, unsold goods? Where do you count it actually? I said there is one more component called as changes in stocks. There is one more component called as changes in stocks. We count all of that in the form of changes in stocks. Then there is exports. Then there is imports. But now please understand this. Please understand the next point. Let me know whether I've told you this statement yesterday. I said between the production method and expenditure method, government believes production method is much more credible. And I've said whenever there is any difference between the production and expenditure method, they will adjust expenditure method to meet whatever the number they have arrived at in the production method. Did I say this? Between two methods, production method is much more credible. And whenever there is a difference between a production and expenditure method, I said they will adjust expenditure method to arrive at the same number that you have got in the production method. Now, please look at what is the GDP number under the production method. Please look at what is the GDP number under the production method. Now, what is the GDP number under the expenditure method? Both are one and the same. Both are one and the same. Any problem here? Now, how do we get both one and the same? Of course, because we are collecting expenditure, there will be certain mismatch. For example, I said black money. Right? What about black money? Black money is not accounted for. But in expenditure, we will use black money. What cash payment, which are not reported, but they will be used in the consumption expenditure. There will be discrepancies. And that is the reason, have a look at the component number 12. Have a look at component number 12. What is the name of the component number 12 under expenditure method? Component number 12 says a discrepancy. Discrepancy. That is, there is certain difference between both expenditure and product method. I will adjust the expenditure method so that I will get the same as the production method. This is a basic idea of how GDP numbers are provided. Should you buy out anything in this table, please do not waste your time. Right? Please do not waste your time. Right? It will be basically the same number. But still it is not same. What are you looking at? What are you looking at? Right? Can you see both these numbers are one and the same? One or two students are saying both the numbers are not same. What are you looking at? Which numbers are you looking at? I don't know. I'm asking you to look at these numbers. What numbers you're looking at, I absolutely don't have any idea. Okay. So have a look at both the numbers. Both the numbers will be same. Now, please do not waste your time. Do not start reading by hearting all the numbers in the table. It is absolutely useless. This data was published by the government at the end of May. At the end of May, that is for the month of, basically for the last financial year, right? It was published at the end of the May. For example, right now we are in which quarter? Please do let me know. Right now we are in which quarter? We are in the second quarter. Done. Right now we are in which quarter? Second quarter. So at the end of August, you will be given the data for first quarter. That is April, May, June. April, May, June. For the end of this quarter, the data will be published at the end of the August. Now here itself, please tell me, right? I'm talking about one of the biggest limitations regarding GDP data. Again, please don't worry about numbers in the table. Why don't you people listen to what I say? Do not worry. Sir, what is RE? What is PA? Why do you want to know? UPSC is not going to ask you all of that. Right? If you want to know, provisional estimates or revised estimates. And you tell me, will UPSC ask you all of this? Don't waste your time. Right? I keep on saying, don't worry about anything in the table, but nahi. Right? Puchte hi rehna hai. Don't waste your time. Look at the point I'm trying to discuss here. April to June, that is first quarter. That is first quarter. What was the GDP value in the first quarter? You will come to know on 30th August. Last day for the month of August. What was the GDP number for the first quarter? You will come to know 30th August, which is 2 months after. June is over, July, August. You will come to on 30th August. Please tell me, right, are we not taking more time to calculate and give the data? Let me know. Are we not taking more time to calculate and give the data? What if now you come to know GDP number in the first quarter was lesser? Let me know. What if now you come to know GDP number in the first quarter was lesser, right? But you will come to know that in the month of August, which means, right, there is a lot of time gap between collection of the data and the publication of the data. That is called as time lag. Time lag means time difference. There is a lot of time taken to collect and give the data, that is publish the result for that quarter. The problem with having a time lag here is, what if you come to know GDP number was lesser in the first quarter, but you come to know about that in the mid of the second quarter? Whatever reforms you are taking, whatever measures you are trying to take, right, don't you think you have already delayed, right? There is a delay in the implementation of the reforms. That is, right, the first reason or first limitation or issue regarding the GDP. Second one is a non-availability of data. For example, I said income method. Do you think Government of India will be able to collect the data, right, through income method? Please do let me know. Do you think Government of India will be able to collect the data through income method? We have discussed all of this yesterday also. Right? They want to calculate GDP, but they want to collect the data. They will come to you. Will you report right source of income, correct income? Again, non-availability of data becomes very difficult, or that creates complications in the calculations. Existence of non-monetized consumption. What do you mean by non-monetized consumption? Monetization means get certain market value. Get market value for something. Get the market value for something, that is called as monetization. Deriving value for something. Now, I'll give a very simple example. The MOSPI says, Ministry of Statistics says, in certain regions, parts of India, we have observed that agriculture workers, when they work in the field, they are not paid money, they are paid food grains. I'll repeat the statement here. Right? MOSPI says, in certain parts of India, in agriculture sector, when workers work, they are not paid money, they are paid food grains. Now, please tell me, right, will you be able to collect what is the salary of agriculture labor here in calculation of GDP? Let me know, right? Can we find out what is the value of this? Right? Of course, no. So, in such cases, how do you use the data in calculation of GDP? Right? So, existence of non-monetized consumption. Labor is provided. We are not able to get the market value for the labor services. Non-monetized consumption. Next one is parallel economy. Tell me, right? Black money, parallel economy. Right? Can we calculate parallel economy or black money presence in the economy in the calculation of GDP? No, that is also a limitation. The GDP calculation doesn't consider what is impact of this production on environment. Whether this GDP is reducing income inequality, whether it is actually increasing income inequality, whether it is increasing wealth inequality, all of that information you will not be able to come to know in calculation of GDP. So these are some of the limitations or issues related to the concept of the gross domestic product. Okay. Now let me go to the next concept. We were in this slide. Okay. Now what we were discussing, concept of business or economic cycle. We were discussing the idea of business or economic cycle. I said, whenever you talk about any economy, the economy does not keep on expanding always. That is, GDP does not keep on increasing always because of various internal and external factors. The GDP will increase, fall, increase, etc. And that is the reason I said, generally, whenever you talk about GDP in the economy, we might experience a very high growth rate in the GDP numbers. We might experience a very slow growth rate in the GDP numbers. We might experience a negative growth rate in the GDP numbers. Right? That is recession. Right? We have discussed all these terminologies yesterday. Right? The boom, expansion, then there is a slowdown, then there is a recession, then there is a recovery. Right? So these are the various phases of growth in the economy. Now, the last point that we discussed yesterday, I hope you remember that. The last point that we discussed yesterday was, whenever there is a recession in the economy, what we generally observe, the growth rate is very low. Employment generation is also very low. Demand and supply is also very low. And I told you, during recession, private sector will not invest money because they are running behind profit. They will not invest money. It is rather the government which will invest money in the economy. Any problem with this? This we have discussed yesterday. Last point was this much only. It is the duty of the government to spend money, right, so that there is a production, there is a employment, there is a demand, there is a recovery in the economy. Now, please tell me, right, a simple question to you. In this example, I repeat, in this example, can I say policies of the government are reducing any event or the intensity of the event that is taking place in the economy? I'll repeat the statement here. Is it okay if I say, in this example, policies of the government is helping in reducing the intensity of whatever is happening in the economy? Intensity means unemployment rate is increasing. Government will help to reduce it. Right? The production is decreasing. Government will help to improve it. The recession was happening. Government will help in reducing the recessionary rate. GDP growth rate was negative. Government will help it to bring positive. Any problem in this? Any problem in the explanation? Please do let me know. This is example 1. Example 2. Whenever the growth rate is very high, whenever the growth rate is very high, right, government, they say government has two options. One, government can invest when the growth rate is very high, and government can reduce its investment when the growth rate is very high. What do you mean by that? When the growth rate is very high, please tell me what will be the private sector investment in the economy? Tell me now. When the growth rate is already very high, private sector, will they invest lesser or invest more in the economy? Private sector is already investing. What about employment? Employment is already increasing. What about production? Increasing. Right? What about supply? Increasing. What about demand? It is already higher. Why? Growth is already there in the economy. Now think of this. When the growth is already high in the economy, what if government will invest more in the economy? Government will also increase its expenditure in the economy. Now, don't you think if government also starts to increase its expenditure, it will further increase investment, further increase employment, further increase demand? Now, what if because of this, the demand becomes greater than supply? Tell me now. What if because of this, the demand becomes more than supply? Can it happen? I'm not saying it will definitely happen. Can it happen? Is there a probability? Of course, yes. If the demand becomes more than supply, what will happen to prices? What will happen to prices in the market? Prices will start increasing. All of you remember this? Market equilibrium, demand becomes more than supply, supply becomes more than demand, etc. And whenever the prices will start increasing, we'll call this as inflation. We'll simply call this as inflation. So now any problem? Any problem with this? Please do let me know. We'll call this as inflation. In fact, the next chapter is inflation only, don't worry. So now the concern is, when the growth rate is very high already, should Government of India also increase its expenditure? Answer is no. Government should reduce its expenditure. Government should reduce its expenditure. Now I'll give you two statements, so please do let me know. When Government of India will increase its expenditure, example 2, when Government of India will increase its expenditure, this will cause inflation. Point number 1. Point number 2, this will increase the intensity of events taking place in the economy. I'm talking about example 2 now. When Government of India increases its expenditure, it will increase the intensity of the events that are already happening in the economy. Can I talk about example 3 now? If Government of India, when the growth is already very high, if Government of India will reduce its expenditure, it will reduce the intensity of events that are taking place in the economy. For example, if Government of India will reduce its expenditure, the employment rate, which was increasing very fast, will start increasing at a slower pace. People were earning more and more money now because the employment was very high. Now the amount of money they are earning will not increase at a very higher pace. The demand for goods and services will not increase at a higher pace. Can I say we can use this policy to control inflation in the market? Any problem with this? Please do let me know. Any problem? So in case of first example, the government policies are reducing the intensity of the events. In third example, government policies are reducing the intensity of the events. Second example, government is increasing the intensity of the events. Can I give you fourth example? Fourth example, when there is a recession. When there is a recession, government will reduce expenditure. When there is a recession, government will reduce its expenditure. Now tell me, when there is a recession, if government will reduce its expenditure, what do you think will happen to unemployment rate? Can I say unemployment rate will start increasing? Does it make sense to you? What will happen to the demand? Demand, can I say, further will fall down? What if there is a recession already? Don't you think recession will become much larger? That is, negative GDP growth rate will become much bigger. So what is happening in the fourth example? Can I use a statement now? Because of these policies, whatever is the intensity of the events is increasing. The events are becoming much more severe. Any problem, please do let me know. Any problem here? Now, I'll basically take these types of 4 policies and classify them under 2 types. One is a pro-cyclical policy. Second one is counter-cyclical policy. And whatever policy we are talking here, they will use the term fiscal policy. They will use the term fiscal policy. What do you mean by fiscal policy here? Fiscal policy basically refers to the expenditures incurred by the government and the taxation imposed by the government. Simple argument, please remember the definition. What do you mean by fiscal policy? It refers to expenditure incurred by the government, anything related to expenditure, and anything related to taxation of the government. That is called as fiscal policy. Now, I'll give you a statement. Let me know what is meaning of it. Right? It's straightforward. What if I say government is following expansionary fiscal policy? Tell me now. What if I say government is following expansionary fiscal policy? What do you think it will mean? Think of it. Right? If I say government is following expansionary fiscal policy, can I say through government, money supply in the economy is increasing? Let me know. Right? Money supply is basically increasing in the economy. That is expansionary fiscal policy. Now, how can government take expansionary fiscal policy? Have a look at this example. How can government increase money in the economy? Can I say, one, by increasing expenditure, and second, by reducing tax rates? Let me know, does it make sense to you? How can government increase the expenditure? One, by increasing the how can government have expansionary fiscal policy? One, by increasing expenditure, government will start spending more money directly. Second, government will reduce the taxes. How reduction in the taxes will increase money supply? You please go back and remember concept of disposable income. Let me know. You please go back and remember the idea of a disposable income. Now, is the logic okay? If government will reduce the income tax rate, will the money supply increase in the economy? Will people spend more money in the economy? Does it make sense to you? Any problem? Please do let me know right now. So, government will follow expansionary fiscal policy by increasing the expenditure and reduction in the taxes. And what about contractionary fiscal policy? What about contractionary fiscal policy? Government will reduce its expenditure and increase the tax rate. Reduce the money. Simple. Reduce the money. Simply reduce the money, right? So that, right, whatever is the intensity, it will automatically come down. Now, let me ask you a very simple question. If there is a very high inflation rate in the economy, the GDP rate is higher, inflation rate is also increasing. Please tell me which of the 2 examples, that is the policies examples, would you want the government to follow? I will repeat the statement. If there is a high growth rate, high inflationary trend in the economy, which of the 2 examples of fiscal policies would you want to follow by the government? Would you want the government to increase the expenditure, or would you want to government to reduce its expenditure? Don't you think a government should follow a policy wherein expenditure should be reduced? Money supply should be reduced. Does it make sense to you? Right? So that whatever is the intensity of the events, intensity of the events will automatically come down. Inflation will not increase. Inflation will come down. People have lot of money. Government will take more taxes from them, etc. Now come to the point here, pro and counter. Pro and counter. I'll give you a statement. Have a look at this very carefully. In case of pro-cyclical policies, the government will take such measures which will reinforce the intensity, which will increase the intensity of the events. I'll repeat the statement. What do you mean by pro-cyclical policy? Right? Whenever the government policies will increase the intensity of the events in the economy, such policies are called as pro-cyclical policies. For example, right, I'll tell you the numbers now for the examples. Please do let me know whether these are correct. Example number 2 and example number 4. Any problem? Example number 2 and example number 4. Again, look at the statement, look at the examples. What is a pro-cyclical policy? Pro-cyclical policy means any policies of the government which will increase the intensity of the events that are already taking place in the economy. Now, any problem with the pro-cyclical policy? What about counter-cyclical policy? Explain examples. My dear, already we have discussed examples, right? Right? Please join on time. What about counter-cyclical policy? I said counter-cyclical policy means whenever government policies will reduce the intensity of the events that are taking place in the economy. The policies of the government will reduce the intensity of the events that are taking place, right, in economy. Example, right, 1 and example 3. In example 1, recession was happening, unemployment was higher, and policies of the government, are they not creating employment? Are they not reducing the impact of the recession? Are they not increasing, right, the production which was earlier decreasing? In case of example 3, growth rate was already very high. There was a danger of inflation. Government will reduce expenditure so that, right, the demand in the market will come down. Inflation will also be controlled. Right? So, pro-cyclical and counter-cyclical. Now, please do let me know. Please do let me know. Right? Does this table make sense to you now? That is, whenever there is a talk of pro-cyclical policy, there is a recession. Imagine there is a recession. If government will follow a contractionary fiscal policy, then basically we will call this as a pro-cyclical policy. Any problem? Right? Let's imagine there is a recession in the economy. If the government will follow a contractionary fiscal policy, we'll call this as a pro-cyclical policy. And if the government will follow expansionary fiscal policy, we'll call this as a pro-cyclical policy during a high growth phase, during a boom phase, or during expansion phase. And whenever there is a recession, if government will follow expansionary fiscal policy, right, we'll call this as counter-cyclical. And when there is expansion, if government will follow contractionary fiscal policy, then we'll call this as counter-cyclical. Any problem? Any problem? Please do let me know. Any problem with any one of them? 1, 2, 3, and 4. 1, 2, 3, and 4. Any problem? Listen to the class very carefully. Those who are saying, right, sir, this is difficult, etc., etc., listen to the class very carefully. You people are not listening carefully. My dear, when there is a recession, what is the GDP number? Is the GDP increasing or decreasing? Let me know. When there is a recession, is the GDP increasing or decreasing? And if I say, and those are saying, explain with the example, what did we do in the previous slide? You're not listening. If you're not listening, that becomes a problem every time. When the GDP is increasing, if government policies will further decrease the GDP, should I call this as pro or counter? Let me know. If GDP is already decreasing, government policies will further decrease the GDP. Should you call this as a pro or counter cyclical policy? All of you will agree? We'll call this as pro cyclical policy. Now, right, have a look at this. How? How the policies of the government will reduce GDP further. I'm saying in recession, the private sector investment is already lesser. During recession, what is the private sector investment? Private sector investment is already lesser. And if government will follow contractionary fiscal policy, what will happen to investment by the government? Investment by the government will also become lesser. That is, expenditure will decrease. And when the expenditure will decrease, already it is lower in the economy. Do you think employment will increase? Do you think production will increase? Do you think demand will increase? No, all of them will further fall down, which means GDP is falling down. GDP is again falling down. So GDP is already lesser, right? The government policies will further reduce GDP. Pro-cyclical policy. Right? Some of you are asking which book, which page number. Books do not have it. Economic survey discusses all of this. And on the other side, when the investment from the private sector is lesser, government will increase its expenditure. Can I call this as expansionary fiscal policy? Can I call this as expansionary fiscal policy? Of course, yes. Right. So during recession, what do you expect? You expect the government to invest more so that production increases, supply increases, demand increases, etc. So that is expansionary, so that GDP will not reduce, rather will start increasing. Counter cyclical policy. Right? Counter cyclical policy. So argument is simple. Whether the policies of the government, are they increasing the intensity or are they reducing the intensity or the severeness of events in the economy? If the policies are adding to the intensity, it is called as pro-cyclical. If they are reducing the intensity, it is called as right, counter-cyclical. Basic idea is this. And please remember this table, UPSC can ask you these kind of questions. In fact, they've asked you this. I'll show it now. Any problem with this? Now, please do let me know. Right? Don't you think it is always better for the government to have counter-cyclical policies? Let me know. Right? Don't you think it is better to have, most other times, not always, most other times, for the government to have counter-cyclical policies? Right? Because please understand, during recession, you cannot go for pro-cyclical policy. That might lead to depression. Right? And during high GDP growth rate, at one or the other point of time, government has to decide to withdraw to reduce its expenditure. Otherwise, it will cause inflation in the economy. I hope you understand the point here. Any problem with this? Right? When the GDP is growing, government should invest. Of course, they should invest. But at one or the other point, government has to decide to control its expenditure. Otherwise, what will happen is this high growth rate might snowball into higher inflation rate in the economy. Okay? That is the basic argument here. That is the basic argument. Right now, this is the end of the chapter for you. Please solve this question. Please solve this question. 62% have answered correctly, but it should have been 100%. Right? Don't you think when there is economic recession, right option will be option B here? Think of it, my dear. Which among the following steps is most likely to be taken at the time of an economic recession? When there is a recession in the economy, don't you think government should increase the expenditure on projects? That is increase expenditure, simple, increase expenditure. Right option is option B here. Let me eliminate the remaining one. Cut in the tax rates accompanied by increase in interest rate. Now, what is increase in interest rate? I'll explain one concept here. Later in the class, I will not repeat it. Look at this right now. Please look at it right now. Here is Reserve Bank of India. Reserve Bank of India, RBI is Reserve Bank of India, will provide loans to the banks. And banks will provide loans to customers. This is a simple sequence. RBI will give loan to a bank will give loan to customer. Now, there are two situations here. First one is RBI will reduce the rate of interest on the loan given to the bank. I repeat, RBI will reduce the rate of interest on the loan given to the bank. Now, please tell me, will the bank now, when they will give loan to the customers, will they reduce the rate of interest or increase the rate of interest? Let me know now. RBI is giving a loan at a lower rate of interest to a bank. What will the bank do? Will the bank reduce the rate of interest on the loan given to the customer or they increase it? They will have to reduce it. Some of you are saying increase it. What is your argument? Please do let me know. Reduce rate of interest. Does it not make sense to you? There should be something very, very difficult for you to understand here. RBI gives a loan at a lesser rate of interest to the bank. Don't you think bank should also reduce its rate of interest on the loan given to a customer? What is difficulty here? What is the difficulty? Right? Bank is taking loan at a lesser rate. So it will give loan at a lesser rate. Right? So that is the argument here. Now have a look at this. When the banks will provide loans at lesser rate of interest, can I say it can promote growth in the economy? It can promote growth in the economy, but there is also danger of higher inflation rate. Any difficulty here? It can promote growth in the economy because more people will take loans, demand more goods and services. More companies will take loans, produce more goods and services. Employment will increase, right? Income earned by the people is increasing. That can cause higher demand, causing inflation. Now, on the other side, RBI will increase the rate of interest. RBI will increase the rate of interest. Now, please tell me, what will the bank do? Will they give loan at a lower rate of interest or they will increase the rate of interest? Of course, it makes sense for the bank to increase the rate of interest. Now, let me know, if rate of interest on the loans will increase, will people take more loans and demand more goods and services in the market? Does it make perfect sense to you? People, will they take more loans to demand more goods and services? Of course, no. Right? Companies will take lesser loans. Production, would be affected. People would take lesser loans. Demand in the market would be affected. Now, can I simply say, higher rate of interest in the economy will help you in controlling inflation. Let me know. Higher rate of interest in the economy will help you in controlling inflation. But on the other hand, if the demand will come down, the goods and services which are purchased will come down, don't you think it will have a limitation effect on the growth? It will limit growth in the economy. Let me know. Right? Is the logic okay here? I've given you two situations. If RBI reduces rate of interest, what is the impact of that in the economy? If RBI increases the rate of interest, what is the impact of that in the economy? Now, please answer to my question. If there is a recession in the economy, if there is a recession in the economy, what do you expect RBI to do? Do you expect RBI to take the policy of first one or second one? Do you think RBI should take the policy of a first one or second one? It's a very simple question. If there is a recession, right? Some of you are not even able to understand the question. If there is a recession, right, would you want RBI to take the first one or second, right, tool? Right answer is first one, my dear. Those are answering second one. If there is a recession, what is the demand for goods and services? Tell me now. This should not be very difficult, right? I don't understand why some of the people are making a mistake. If there is a recession, what is the demand for goods and services? Demand for the goods and services is already low. What about production? Production is already low. What about unemployment rate? It is very high. Now you want to increase the rate of interest in the economy. You want to make loans much more costlier in the economy. Do you think, right, that will increase the demand in the market? You want to make recession depression. Think of it. You want to make recession into depression now, right? Lower the demand, right? More unemployment rate, lower production, GDP will further fall down. So tell me, during recession, do you think RBI should RBI should increase rate of interest? Do you think that makes sense to you? Right? So the right option is the first one. RBI should reduce interest rates so that there is a recovery in the economy. Now, please look at the option A and tell me, right, is it correct? Look at the option A and please tell me, is it correct? Right? Look at the second part of the option. Look at the second part of the option. It says increase in interest rate. No, it is wrong. What about option C? Increase in tax rate. During recession, you want the government to increase tax rate. Again wrong. Reduce expenditure by the government. Again wrong. Right? So the right option will be option B here. Okay, right option is option B. Right? So this is how application based questions are asked by UPSC. Please be very careful. Now there is a concept called as a GDP deflator. Most probably either today or tomorrow we'll discuss GDP deflator. Then we'll solve the question. Please don't worry about it. Right, so yesterday itself we have discussed this question on GDP calculation methodology. Right, so there is no point in repeating the same thing again and again. Now let me go to the next chapter. Let me go to the next chapter. Right, what is the concept of inflation? What is the concept of inflation? Now these are the list of the subtopics that we'll be discussing today. Inflation is very, very important. Right? Very, very important. Please be very careful. Now, let me start with the definition of inflation. Let me start with the definition of inflation. Now, what is the definition? Inflation is the persistent increase in the price level of basket of commodities. Right? Inflation is nothing but there is a continuous increase in the price that we are paying for basket of commodities. For example, let's assume basket. Again, many of you ask me, sir, what do you mean by basket? Basket simply means collection. Basket simply means a collection or a group. Okay, let's imagine there is a basket of commodities. And in this basket of commodities, let's say there are 10 goods. Simple number. There are 10 goods. Now, last year, to purchase these 10 goods, imagine you paid 100 rupees. And this year, for purchasing the same basket of goods, you are paying 110 rupees. Now, please tell me, is it the definition of inflation? Look at it and please do let me know. For a basket of commodities, last year you paid 100, now you are paying 110. Right? Is it not a rise in the prices of group or collection of commodities? This is basically called as inflation. Inflation is nothing but a price rise for group of commodities. Right? That is the definition of inflation. Now, hundreds of definitions are there. Please don't worry. For example, I'll give you one more definition here. Inflation, right, is basically a situation wherein purchasing power of money will fall down. Inflation is a situation wherein purchasing power of money will fall down or will decrease. What do you mean by this? Right, let's imagine. I'll take a very simple example here. Current affairs, and you tell me. Right, the tomato prices. Best current affairs example. Right, last year for 100 rupee, you are able to purchase, let's say 2 kgs of tomato, and many of the times even 10 kgs of tomato. But this year, for same 100 kgs, you are able to purchase half a kg of tomato. If you are lucky, half a kg of tomato. Now, please tell me, can I say it simply means purchasing power of 100 rupees has fallen down? Any problem in understanding this? Purchasing power of, right, the 100 rupee has fallen down. Now, look at the definition here for inflation. Right, inflation is a situation wherein the purchasing power of money is continuously decreasing. Right, that is one more definition. Many definitions are there, don't worry, but ultimately what does it mean? For basket of goods and services compared to a reference period, now you are paying more money. That situation is called as inflation. Now, what are the classifications? Right, what are the types of inflation? We'll give you two classification. I'll give you two classifications. Please be very careful. On based on rates of inflation, I'll give you one classification. And second one based on the causes. And if you ask me which is more important for the examination, I would definitely put my bet on based on the causes of inflation. We'll discuss questions later, don't worry. You will see lot of questions are asked by UPSC based on the causes of inflation. Because there, right there, you will have to be very careful with respect to the concepts. You'll have to be very careful with respect to concepts. Now let me start. First one is based on the rate of inflation. Right, one is a moderate rate of inflation. Second one is a galloping rate of inflation. Third one is hyperinflation. Now, what is this rate of inflation? If you're reading newspapers, don't you think very often you'll come across a number? They'll say rate of inflation is 7%. Rate of inflation is 8%. Rate of inflation is 29%. Yes or no? Please do let me know. Do you come across these kind of numbers in the newspaper? For example, right, if you have not read, even now if you are not reading newspapers, please check what is happening to the inflation rate in Sri Lanka. Please check what is the inflation rate in Pakistan. Right, you will know that, or you'll come to know that inflation rate in both of these countries, right, was basically in a double digit number. Was basically in a double digit number. That is, it was a 40%, 26%, 29%. And in case of India, what is the inflation rate? Inflation rate is 4%. Inflation rate is 5%. Inflation rate is 4.9%. A single digit number. All of you agree? In case of India, the inflation rate is a single digit number. Now, please don't ask me what you mean by single digit. High school, forget about high school. I'm going to primary school now. Right, a single digit number. Single digit simply means less than 10%. Right, less than 10%. So, whenever the inflation rate is in a single digit number, it is called as a moderate rate of inflation. For example, India. In case of India, what is the rate of inflation? 4%, 4.9%, 5.3%, etc., etc. Whenever the inflation rate is in a double digit number, whenever the inflation rate is in a double digit number or a triple digit number, it is called as a galloping rate of inflation. Right? Any example in recent current affairs? Many countries, right, including, let's say, including Pakistan, right, or for that matter, some of the African countries such as Egypt, right, Asian countries such as Sri Lanka, they are experiencing double digit rate of inflation. So, whenever you are talking about double digits or triple digits rate of inflation, we'll call this as galloping rate of inflation. And whenever the inflation rate is very high number, very, very high number, For example, inflation rate can be 80,000%. Inflation rate can be 2.7 lakh percent. Whenever the inflation rate is a very, very high, we'll refer to this as a hyperinflation. Hyperinflation, right? That is, for example, in Venezuela. Have you heard of the country Venezuela? In Venezuela, some months ago, the inflation rate was right in terms of lakh percentage. For many months, it was right in terms of thousands of percentages. Zimbabwe experienced 2.7 lakh percent. So there have been instances where the inflation rate have been very, very big numbers as well. Within moderate, we have one more classification: creeping rate of inflation and a walking rate of inflation. Creeping rate and a walking rate of inflation. What do you mean by creeping rate? Whenever the inflation is generally around 3%. Whenever the inflation rate is generally around 3%, we'll call this as a creeping rate of inflation. Creeping means what? The price levels are moving, but they are moving very, very slowly. I hope you understand. The price levels are moving, but they are moving very, very slowly. That is the definition, that is the meaning of the term creeping inflation. Whenever the inflation rate is more than 3% and somewhere below 10%, we'll call this as walking rate of inflation. Right? Based on the rate of inflation, creeping and walking. Done? So this is one classification of inflation. Some of you are asking, sir, how inflation is calculated? I'll show you the inflation calculation rate, although I don't expect UPSC to ask that question. I will show you that, have patience. So this is one classification. This is the second classification. And as far as I'm concerned, this is much more important. This is much more important compared to the previous one, because previous one is just factual. Just factual. Right? Around 2 to 3% creeping, more than 3% and below 10% walking, right? Double digits or triple digit galloping, and right, a very, very high number, astronomical number, 80,000%, 1.3 lakh percent, 2.7 lakh percent, right? That is hyperinflation. Just factual information. But this is more conceptual. Follow this very carefully. This is very important. Now, inflation can be caused because of demand side factor as well as supply side factors. Inflation can be caused because of demand side factors as well as supply side factors. Now, right, many of you will ask me, sir, what do you mean by demand side factors? Let me ask you a very simple question. Imagine Government of India will provide you a cash subsidy of 10,000 rupees per year, or let's say once every quarter. Simple question, by the way. Think of it. Government of India will provide you 10,000 rupees every quarter in the form of a subsidy. Question number one. Will Government of India's expenditure increase because of this? Question number one. Will Government of India's expenditure increase because of this? Anybody has a doubt here? Arey Baba, some of you are saying no. I'm saying government will give you 10,000 rupees every quarter, and the question is, Government of India's expenditure, will it increase because of this? Some of you are saying no. Why? What is the point? Right? What is the confusion there? It will increase. Point number two, if all of us get this amount, will the demand for goods and services increase in the economy? Second question, will the demand for goods and services, will it increase in the economy? Can it lead to inflation? Think of it. Can it lead to inflation? Right? Is there a possibility? Of course, yes. But please tell me, this inflation that is happening, is it because the production cost is increasing, or is it because demand is increasing? The logic should be very clear to you. Is it because the price of the manufacturing or the cost of production is increasing, or is it because the demand is increasing? Demand is increasing. I'll give you one more example. We have discussed this earlier. I'll give you this example again. RBI will reduce interest rates. RBI will reduce interest rates. That is, I'll say RBI will follow expansionary policy. Any problem with the term here? RBI will follow expansionary policy. And there's a term, right? I'll give you a technical term here. Monetary policy. Earlier we have discussed fiscal policy. Now I'm introducing one more term to you. Monetary policy. Monetary policy simply means, right, the Reserve Bank of India will use various measures to either increase or decrease money supply. I'll repeat the statement. Right, Reserve Bank of India will use various tools either to increase or decrease money supply in the economy. And for those of you who are asking the question, what is expansionary? My dear, you tell me what is expansionary. Did we not discuss this? Right? Why has the memory become so short for you now? Why is the recollection capacity so short? Did we not discuss the concept of expansionary and contractionary 20 minutes ago? Expansionary means increase, right? Contractionary means decrease. It's not that difficult. We have discussed this already. So please tell me, if RBI will follow expansionary policy, can the demand increase in the market? All of you will agree with me? If RBI will follow expansionary policy, can the demand increase in the market? And can that cause inflation in the market? Of course, yes. So have a look at this. Whenever there is an increased money supply, whenever government expenditure will increase, can it cause inflation? Yes. But this inflation is because of higher demand. This inflation is because of higher demand. And whenever because of higher demand, that is, demand is increasing, causing inflation, we'll call this as a demand pull inflation. Is it okay? Whenever the demand is increasing and that is causing inflation, we'll call this as demand pull inflation. Now, there are two more components here. First one is clear with you. Third one is clear with you. Let me discuss second and fourth. A simple question to all of you. Second one also is very easy. We have discussed it earlier. If there is very high growth in the economy, what do you think will happen to employment in India? Right? Connect the dots. Very simple. Connect the dots. If there is very high growth in the economy, what will happen to employment? It will increase. What about salaries or incomes earned by the people? That will also increase. And if salaries or incomes during high growth phase, it is increasing, what will happen to the demand in the economy? Demand will also increase. And when demand will increase, what will happen to the market prices? Market prices will start increasing. And that can cause inflation. Is the second point okay with all of you? Is the second point okay with all of you? First, second, third, right? Basically, application of what we have discussed so far. Let me go to the fourth point. Inflation expectations. Inflation expectations. Now, what is the inflation expectation? It simply means what is the expected movement in market in the future. Expected movement in the market in the future. Speculation. Simple. Speculation, expectation, one and the same. Expected movement in the market in future. Now please tell me, today you come to read, or today you read the newspaper, and in the newspaper it says, right, from 1st to 10th of July, right, from the 1st to 10th of July, tomato prices increased by 10 rupee. From 10th to 20th of July, tomato prices further increased by 30 rupee. Now please tell me, what is your expectation regarding tomato prices in the next week? Let me know. right? You read in the newspaper, from the 1st to 10th July, prices have increased by 10 rupee. From 10th to 20th, the prices have increased by 30 rupees. Now you tell me, will you not come to a conclusion based on this data? Will you not come to a conclusion in the coming days again, market prices will increase? Yes or no? Is it not your conclusion based on this data? Can I call this as expectations? Can I call this as expectations in the inflation in the coming days? Now, if you are a consumer of tomato, will you buy more of tomato today or will wait for one more week? Think of it. If you are a consumer of tomato, will you buy more of tomato today itself or will you wait for one more week? Don't you think today itself, even though the prices are higher compared to last 10 days, today itself you will go to the market, purchase more? I hope you understand. Some of you are saying, sir, I will wait. My dear, the expectation is that in the future prices are going to further increase. You tell me, if you know that, will you not purchase more tomatoes today compared to, let's say, how much will you purchase after 1 week? Right? For example, I'll give you one more information here. Couple of days ago, I said turmeric prices in the coming days will increase. Yes or no? Turmeric prices in the coming days will start increase. Now, please tell me, will you not purchase more, let's say one more packet of turmeric today, fearing more prices or higher prices in the future? Yes or no? I'll give you one more example. Couple of days ago, in fact, I asked you to read that article. Couple of days ago, government of India banned export of certain rice varieties to other countries. Yes or no? And because I'm saying this, please read today's article, Hindu newspaper. They are talking about, very nice article by the way. They are talking about whenever government of India will impose such a restriction, what will happen to inflation rate in international market. And yesterday I asked you to read about article published on IMF data. Did you people read that? Yesterday also it was there in the newspaper. I asked you people to read about, right, the article on IMF head, the chief of IMF, who says the policies of the government will stoke inflation in the market. I asked you to read that. Right, today also there is one article again, sir, which newspaper? Yesterday also Hindu, today also the Hindu. In the Hindu newspaper, today they have one more article in the central page where they're discussing what impact government policies on export ban of these commodities, what impact it will have in the international market. Now have a look at this, right? Tell me whether this makes sense to you regarding inflation expectation. Government of India banned certain types of rice varieties to be exported from India. What happened to the demand for the rice in USA? Let me know. What happened suddenly to the demand for the rice, that kind of a rice, Sona Masuri rice in USA? Do you think people stopped purchasing that kind of a rice in USA? Then you're wrong, my dear. You do not know how the market works. People went to the market, purchased as much rice as possible day for yesterday itself. Can you check it? If you don't trust me, please check it. That is how people will behave. That is how people will actually behave in the market. Now, please tell me, when the prices are, let's say, whatever the prices are, because of your concern regarding the prices in the future, today itself you will go to the market, start purchasing more and more. Will it increase the demand? Will it increase the demand? And if the demand increases, what will happen to prices? Prices automatically will start increasing. Can that cause inflation in the market? Again, the answer is yes. So these are certain features, certain reasons why demand side inflation can be caused in the economy, hence called as demand pull inflation. Demand pull inflation. Now come to the supply side. Okay. 5, 6, 7, 8, 9 and 10. Come to the supply side. Point number 5. Cost of the raw materials, labor cost will increase. Please tell me, if the wages that you're paying, If the raw material cost that you're paying, if it increases, will you sell the product at the same price in the market? Very basic idea. Will you sell the product at the same price in the market? Will you not increase the price of the product? Market price will increase. Can it cause inflation? Second, rate of interest on the loans that you have taken. Rate of interest on the loans that you have taken. Imagine to manufacture this bottle, you are taking a loan from a bank. Simple. To manufacture this bottle, you are taking a loan from a bank. And the bank charges you 4% rate of interest now. What if the bank will increase the rate of interest from 4% to, let's say, 8%? I'm doubling so that it is very clear to you. If rate of interest on the loan will increase from 4% to 8%, now you'll have to pay more interest rate to the bank on the loan that you have taken. What will happen to cost of production? What will happen to cost of production here? Don't you think cost of production will start increasing? And when cost of production increases, what will happen to market price? Market price will also increase. Simple argument. Increased GST rate. Increased GST rate. Right? In fact, we have discussed this yesterday also. If government will increase the GST rate on this bottle, simple question, what will happen to market price? Right? Is the logic okay with all of you? Market prices will increase. And the market price increasing means it can cause inflation. Right? 8, 9, 10 and 11, I'll discuss separately now. Follow this very carefully. 8, 9, 10 and 11. Now, what is this argument of supply shock here? What is this argument of supply shock? Supply shock means sudden disruption, sudden, not planned, sudden disruption in supply of certain commodities. Sudden disruption in supply of certain commodities. Best example, tomato. Best example that I can think of today in the current affairs is tomato. Now, please tell me some of the reasons why tomato supply has reduced. I repeat, some of the reason why supply of tomato has reduced. Can I say it is because of unseasonal rainfall? Let me know. It is because of unseasonal rainfall. There are various reasons. Because of unseasonal rainfall, tomato supply has gone down. Now, please tell me, unseasonal rainfall, don't you think that is going to cause a sudden disruption in the supply of commodity? Let me know. Right? The unseasonal rainfall, is it not going to cause a sudden disruption? Nobody is going to plan for rainfall. I hope you understand. Right? Nobody is going to plan for unseasonal rainfall. Look at the name itself, unseasonal. Suddenly, without any indication, the rainfall will happen. Crops will be destroyed. Right? So that is a sudden disruption. Can I give you one more example? One more example. Russia-Ukraine war. Not very, very difficult to understand. Russia-Ukraine war. Now, when Russia-Ukraine war took place, can I say suddenly the export of wheat from Ukraine stopped? Let me know. Suddenly, oil supply from Russia came down to the international market. What happened to the prices? What happened to the prices? The prices would start increasing, causing inflation. Any problem here with respect to point number 8? Any problem? Right? One student is asking, sir, how rate of interest will cause inflation? My dear, please understand the next point here carefully. Rate of inflation, the rate of interest rates on a loan, RBI can ensure selectively for one borrower it will be higher, for another borrower it will be lower. Let me know. I'll repeat the point again. Right? There are two students who are asking how rate of interest can cause inflation. Rate of interest can be used to control inflation. I am saying RBI, and we'll discuss all of this. Have patience. We'll discuss all of this. RBI, using various tools that they have, can ensure for some of the loans, rate of interest can be increased, and for some of the loans, rate of interest can be decreased. And in this example, I'm talking only from the context of manufacturer. Okay. Now, point number 9. Right. And okay, one more student is asking, what is the full form of GST? Goods and Services Tax. We have not discussed that. We'll discuss it later. Please don't worry. Point number 9, structural inflation. Now, what do you mean by structural inflation? Structural inflation simply means whenever there are inefficiencies in the infrastructure, when there are inefficiencies. What do you mean by inefficiencies? Shortages. Whenever there are certain inefficiencies or shortages in the economy, it will cause, right, a mismatch in the demand and supply. I'll give you example, have patience. Whenever there are shortages or inefficiencies in the economy, that will cause, right, a mismatch between demand and supply that can cause inflation. How, sir? Let me start. Right, understand the logic here. In case of India, we need to provide warehousing for agriculture commodities. Warehousing means what? Storage. Any problem with this? Please do let me know. Do we need storage facilities for agriculture sector? Anybody has a problem with this? Right, point number 1. Second point, we need to transport goods and services in India. We need to transport goods and services in India from one point to another point. And what is the cost of transportation? Will have an impact on market prices. What is the cost of transportation? Will have an impact on market prices. Anybody has a problem with the point number 2? Please do let me know. Right, point number 3. We need to have very good processing infrastructure in agriculture sector. Now you'll ask me, what do you mean by processing? Processing simply means converting from one form to another form. Simple idea. Processing means converting from one form to another form. For example, let me give a very simple example. Can we convert mango into juice? Anybody has a problem with this? We need to convert a mango, or we can convert mango into juice. Sir, what do you mean by mango into juice? Have you heard of the company? Product name, Slice. Fruity. What are these? Right, basically, mango juices. Now, please understand, whenever you convert one product in agriculture sector into another form, we'll call this as food processing. We'll simply call this as food processing. Now, come to the point. What I'm trying to convey to you people, will go point by point. Point number 1. We do not have sufficient storage capacity in India. We do not have sufficient storage capacity in India even today. Which means, please tell me the answer. If we are not able to store whatever we have produced in the warehouses, don't you think some of it will be lost because of sunlight? Some of it will be lost because of rainfall. Correct or wrong? Any problem here? Whatever we have produced, we are not able to store it. And as a result of this, some of the food grains, some of the horticulture products will be lost. Now, will it cause a mismatch between demand and supply? Let me know. Will it cause a mismatch between demand and supply? Yes. Point number 2. We need to transport goods and services from one point to another point, be it agriculture goods or commodities, be it, right, any other form of a commodity or a goods that is produced. But remember this particular point. In case of India, cost of transportation is higher compared to other countries. In case of India, the cost of transportation is higher compared to other countries. Right? Look at the next point here. I'll connect it to the point number 2. There is a term called as logistics. And please remember this. Don't keep on asking every time I say logistics. Don't keep on asking me what is logistics. Logistics simply refers to certain activities that are undertaken to move the goods. Activities that are undertaken to move the goods. Now you'll ask me, sir, what do you mean by activities undertaken to move the goods? Can I say packaging, storing, transporting? Let me know. Can I say part of logistics? Example, part of the logistics will be packaging the product, right? Storing, warehousing the product, as well as, right, moving, transporting the product. Can I say these are part and parcel of logistics sector in India? Anybody has a problem? These are part and parcel of logistics sector in India. Correct or wrong? Please do let me know right now if there is any issue. Now I say, in case of India, cost of transportation is very high. That's a fact. In case of India, cost of transportation is very, very high compared to other countries. For example, government data. Government of India itself says cost of logistics in India is around 13 to 14% of GDP. Cost of logistics in India, it is around 13 to 14% of GDP. Whereas in other countries such as USA, China, Germany, etc., cost of logistics somewhere is in the range of 6 to 8% of GDP. Which means when you transport, when you store, when you package, etc., the prices are higher. Now, please tell me, if the cost of logistics is higher, what will happen to market prices? Please do let me know. If the cost of logistics is higher, what do you think will happen to market prices? Don't you think market prices will increase? And now tell me, if fuel prices, simple question to you now. If fuel prices will increase, petrol or diesel, if fuel prices will increase, transportation price will increase, and as a result of this, cost of logistics will increase, market price will increase, right? Is it inflation or not? Simple question. Is it inflation or not? Right? Of course, yes. Right? So whenever there is an inefficiency, whenever there's a shortage in the economy, certain shortages are there in the economy, and that will cause a difference between demand and supply, causing inflation in the market. Can I go to the next point now? Right? Can I go to the next point? Right? In case of India, food processing levels are also very low. Again, I'll connect it to the current affairs so that you understand what is actually happening. Food processing levels are very, very low. So, any example? Tomato. Simply take tomato. Right? Tomato, in case of India, only 1% of it is actually processed. What do you mean by processed in case of tomato? Fresh tomatoes can be converted into puree. Correct? Fresh tomatoes can be converted into puree. Puree is nothing but the basic smashing of tomatoes. Fresh tomatoes can be converted into puree. Tomatoes can be converted into ketchup. Right? That is basically the processing of tomato. In case of India, only 1% of tomato that is produced is right processed. Now, please tell me, whenever there is a sudden disruption that is going to cause because of, let's say, the monsoon, excess monsoon, shortage of monsoon, whatever it is, if we do not have sufficient processed foods, alternative, simple, alternative, substitute, if we do not have very good alternatives or substitutes in the market, don't you think market prices will continuously keep on increasing? Yes or no? Does it make sense to you people or not? I'll give you one more example here. Onion, milk prices. Why do you think the prices of onion and the milk keep on increasing? Of course, yes, there are various other factors. We do not have sufficient processing of onion in India. Right? Onion we generally use, or onion that we generally use, it is basically a fresh bulb. Right? You know, this is called as a fresh bulb. Onion that we use, it is basically a fresh bulb onion. Most of us use fresh bulb. But there's a processed product also for onion. What is a processed product? In the market, you will get onion powder. Check it, by the way. You will get onion powder. You will get dried onion in the market. But processing levels of this onion is very low in India because the demand for such products is very low. In fact, if you're reading newspapers, and please do that. In fact, if you're reading newspapers, many of the experts, one way, that is a long-term solution. Look at it and please do let me know, does it make sense to you or not? One way, which is a long-term solution for these kind of problems in agriculture sector, is that they say improve processing of agriculture commodities. Increase the processing level for agriculture commodities so that in future, that is maybe after 2 years, after 3 years, if there's a sudden disruption of supply of, let's say, onion, right, people will not think twice to substitute a fresh onion with powdered onion, so that the demand will not be very high, prices will also not be very, very high in the market. Any problem with these examples? Can I say all the examples that are given here? Point number 1, 2, and 3, all of them are inefficiencies or shortages of Indian economy. Let me know so that I can go forward. Right? Point number 1, point number 2, and point number 3, all these are shortages of Indian economy, inefficiencies in the Indian economy. Right? That is the reason this can cause inflation in the market. This is called as structural inflation. Next one is called as a hoarding. Let me explain. After that, we'll discuss cartelization. Now, what do you mean by hoarding here? What do you mean by hoarding and cartelization? On one side, we'll discuss hoarding. On the other side, we'll discuss cartelization. Now, what do you mean by hoarding? Hoarding simply means, I'll write the definition here. Hoarding simply means storing or warehousing more than what is allowed by the government. Storing or warehousing more than what is allowed by the government. Let me explain this with an example. I'll take example of rice. Right? Again, connected to current affairs only. All of this you understand with current affairs. Have a look at this. Right? In case of hoarding, imagine government of India will say, I'll take a very simple supply chain. Here is a farmer, and from the farmer, a middleman will purchase, traders. A middleman will purchase rice and will sell it to a shopkeeper, and shopkeeper will sell it to customer. Simple supply chain. Do not complicate it. Now, let's say government of India says the middleman who is purchasing, the trader who is purchasing from the farmer in the market, is not allowed to store more than 10 tons of rice. The middleman or the trader is not allowed to store more than 10 tons of rice. Right? Let's take numbers so that you understand. Imagine from the farmer, the middleman will purchase 100 tons. If the trader is allowed to store maximum 10 tons, can I say to the market, 90 tons of rice will come? Any problem here? If the government has a limitation of 10 tons imposed on the middleman, right, and if the middleman will purchase 100 tons, then the 90 tons has to come to the market. Now, what if the trader here becomes very greedy? Rather than, right, storing 10 tons, which is allowed by the government, what if the trader will store 40 tons? Tell me now. What if the middleman or the trader will store 40 tons? Don't you think supply to the market will fall down to 60 tons? Any problem in this? Supply to the market will suddenly fall down. Shortage, scarcity will be created in the market. And when the supply will come down, what do you think will happen to market prices? Market prices will increase. Can it cause inflation? Answer is yes. Any problem here? Right? Any problem here? Right? What is hoarding? Hoarding means, right, the government has imposed certain restrictions on storage or warehousing, but you will store more than what is the allowed limit. That is called as hoarding. And government uses an act. Please remember this. There is an act by the name of Essential Commodities Act. Important for exams, especially rice is being discussed, wheat is being discussed now. Essential Commodities Act of 1955. What is this Essential Commodities Act? We'll use a short form of this, ECA. ECA says government has the power over imposing limits on storage. Government will have the power to impose storage limits. Government will have the power over distribution of the commodities. Government can also impose a restriction over pricing of the commodity. All these powers are given to the government on Essential Commodities Act. Right? All these powers are given to the government under Essential Commodities Act. I'll connect it to current affairs. Think of it. During pandemic, don't you think the demand for sanitizer was very high? Think of it. During pandemic, don't you think demand for sanitizer was very, very high? Now, despite the demand being so high, why do you think market prices did not increase to 500 rupees, 600 rupees, or even 1000 rupees for a small bottle of sanitizer? Tell me now. Apply logic and tell me. Despite the prices being very high, despite the demand being continuous, very, very high, why did the companies not sell a small bottle of sanitizer at 2000 rupees? Because government said, we will cover the sanitizer under Essential Commodities Act. We'll cover it under Essential Commodities Act. And because we are covering it under Essential Commodities Act, you will not be allowed to price, you will not be allowed to have a MRP of more than this. That is the precise reason. Masks, right? I hope you remember this. The prices of the mask did not skyrocket. The prices of the sanitizers did not skyrocket during pandemic. Otherwise, you could have not imagined what could have been the prices of these commodities if not Essential Commodities Act of 1955 was imposed. Because private sector knew that people will purchase it. People will have very high demand for it. They will increase the price. What can you do? Think of it. What can you do in that context? Right? So argument is simple. Right? The Essential Commodities Act will give the power to the center here. Let me shift to the right now. Cartelization. What do you mean by cartelization? Cartelization simply means the group of producers or suppliers will come together to decide on supply. I'll give you a prime example connected to current affairs. Right? What do you mean by cartelization? Group of producers or suppliers will come together to decide on supply of commodities. Best example for this is OPEC. Have you heard of OPEC grouping? Let me know. Have you heard of OPEC grouping? OPEC stands for oil producing and exporting countries. Very, very famous now. Those who are saying no, please read current affairs. You are not reading current affairs, my dear. Very simple. You are not reading current affairs. OPEC basically consists of 13 countries. It consists of 13 countries. Now, imagine OPEC will come together and they will decide that they will cut oil production. Simple. OPEC will come together. They will decide cut the oil production. Two students are asking explain cartelization. What do you think I'm doing? Let me know. Two of the students are saying, explain cartelization. What do you think I'm doing now? Right? Can you see the heading? Can you see a bifurcation? Please observe, my dear. OPEC came together and they'll say, let's cut oil production. And now, simple question to all of you. If OPEC will decide to reduce oil production, what will happen to supply of oil to the international market? What will happen to the supply of oil to the international market? Don't you think oil supply to the international market will go down? And when supply will go down, right, even if the demand remains the same, supply goes down, what will happen to market prices? What will happen to market prices? Market prices automatically will start increasing. Can it cause inflation? Let me know. Can it cause inflation? And moreover, why is the inflation being caused here? It is because of cartelization. That is, group of producers have come together to decide on production. They want to take a call on production whether they should increase the supply or they should decrease the supply. Right? This is the basic argument of cartelization. Now I'm taking example of OPEC because please remember this. In case of India, cartelization is not allowed. In case of India, cartelization is not allowed. Government of India says you are not allowed to form a cartel. And to ensure that there is no cartelization in the economy, there is one authority. Please remember the name of the authority. Competition Commission of India. Competition Commission of India. Competition Commission of India, CCI. Government of India has set up a statutory authority, CCI, Competition Commission of India, which will ensure that, right, these companies which are there, right, for example, what if all the telecom companies come together, they will, right, decide what is the price. Everybody will come together and they will decide from today, 4G data will be higher. Think of it. Right? Can all these telecom companies band together and they'll increase the market prices of a 4G package? Of course, yes. What if all the DTH providers will come together, form a cartel, and they will collectively increase the package prices of DTH? What is the option available to you? I hope you understand. What is the option available to you? No option is available. You will have to pay more prices. That is the reason cartelization is not allowed. And if there is any issue, any right, let's say allegation that there is a cartel formed, then Competition Commission of India will investigate it. Competition Commission of India will investigate it, and if they find that there is in fact a cartel being formed, they will impose penalties on these companies. They will impose penalties on these companies. Done. And again, please understand, idea of Competition Commission of India is any company, right? There could be only one supplier also in the market. I hope you understand. One supplier means monopoly. There could be only one supplier in the market. But whatever is the pricing decision, whatever policies are there of the supplier, that should not be against market, or that should not be against the interest of the consumers. It should not be unfair to the consumers. That is the whole argument of the objective of Competition Commission of India. Whatever you are doing, whether you are the only supplier or there are a group of suppliers, right, you should not be involved in taking unfair policies. You should not be having any unfair policies. If you are having unfair policies, Competition Commission of India will penalize you. Done. Right? So hoarding, cartelization. Right? Can we go next now? Any problem with this? Right? So first it will be supply side, and because supply side is causing inflation, we will call this as cost push inflation. And whenever the demand side will cause inflation, we'll call this as demand pull inflation. Now, can both of them happen simultaneously? Right? Let me know. Can both of them happen simultaneously? Can I say that in the economy, demand side factors as well as supply side factors, both will cause inflation? Of course, yes. Both of them can cause inflation in the market. Nothing wrong with that. Now, please look at it and tell me. look at the situation in the market regarding tomato. What do you think is dominant? The tomato prices which are causing inflation, dominant, underline the term dominant. Do you think the demand side is dominant or supply side is dominant in causing inflation in tomato prices? Think of it. Please think of it. What do you think is dominant? Do you think the demand side is dominant or the supply side is dominant in causing inflation, right, in tomato prices? It is supply side. It is supply side. I'm saying again, Baba, dominant, no? Do you understand the term dominant? Let me know. Do you understand even the term dominant? Right? So it is supply side. Why? Unseasonal rainfall. Right? In some of the states such as right, Karnataka, etc., unseasonal rainfall, farmers did not cultivate. Whatever was there, they destroyed the crop. Right? Higher rainfall now, whatever is the standing crop, that is also getting destroyed. Right? The tomatoes are there, but we are not able to transport because there is a flooding situation. That is also causing, right, a reduction in the supply. So these are the factors. These are the factors that is causing, right, the supply side, the supply side, right, dominance, which is leading to higher market prices. Okay, right. Now let me go to the next one. Let me go to the next one. That is, how do we measure inflation? How do we measure inflation in India? Focus on India here. There are two measures. One is called as a WPI. Second one is called as CPI. One is a WPI. Second one is CPI. Now, before you start asking me, the names are there, expansions are there, right in front of the acronym. Please observe. WPI means Wholesale Price Index. CPI means Consumer Price Index. Now, what is the basic idea? Whenever the goods are sold in wholesale market, right? Have you heard of the term wholesale market? Please tell me. Have you heard of the term wholesale market? Wholesale market means what? The quantities which are purchased will be very high. Quantity of goods sold will be very, very high. So generally in the wholesale market, main participants are who? Main participants are from one company to another company. Goods are sold. From one company to another company, goods are sold. For example, steel, aluminium, etc. From one company to a trader. From one company to a trader in the market. That is also basically happening in the wholesale market. So generally, whenever you talk about business to business, I've written B2B here, business to business, right? Business to business, company to traders, etc. These are done in large quantities, not small quantities, large quantities. This market is basically a wholesale market. So whenever you measure changes in the price level, I repeat, whenever you measure the changes in the price level for basket of commodities in the wholesale market, that is basically called as WPI. Any difficulty? Whenever you measure the changes in the price level for basket of commodities in the wholesale market, right, that is called as wholesale price index. Point number two, the WPI is published for every month. Point number two, the WPI is published for every month. For example, right, this is my advice to you. The 13th of next month, 13th of next month, because 13th of this month is already over and we started classes after that. 13th of August, please read newspaper. Any newspaper that you want, doesn't matter. Please read newspaper, but it should be national daily. Right? Don't say I read regional newspaper, sir, because you said any newspaper. Read any national newspaper, you will come across data regarding WPI and CPI. You'll come across data regarding WPI and CPI, right? Which means in the month of August, that is, let's say 13th of August, right, they will give you data regarding what was a WPI for the month of July 2023. Any problem in this statement? I'll repeat the statement here. Right, in the month of August, that is when you read a newspaper on 13th of August, They will give you data of what was a WPI number for the July 2023. Right now, that is very fixed. Every month, 13th, like this, they will publish both WPI as well as CPI. That is fixed. Please observe, don't buy hard numbers. Numbers are not important. Now, that is basically the meaning of a statement. For every month, the data is published. For full financial year also, the data will be published. In case of WPI, the base year for the calculation of a WPI is 2011 and 12. Please don't start asking me about base year. Today, maybe in the second half or tomorrow, we'll definitely discuss about base year. Have patience. We'll definitely discuss, but you should have patience. How base year is useful, how do we use it, everything I'll show you calculation. Have patience. So for WPI, base year calculation is 11 and 12. And in case of WPI, total number of commodities in the basket is 697 and only goods are considered. Only goods are considered in the WPI. Any problem so far? In case of CPI, this is also published for every month. This will focus on measuring the changes in the price level for basket of commodities in the retail market. In the retail market. What do you mean by retail market? Retail market is the one where individual consumers will purchase the product for consumption. Is it okay? I'm giving you the definition of retail market. Retail market simply means where you, me, your friend, your neighbor, etc., all of us will go purchase commodities for consumption. For example, you will go to Big Bazaar and purchase a soap. Yes or no? You will go to more, purchase, let's say, a packet of biscuit. You will go to the market, purchase, right, 1 kg of tomato. All of these are examples of retail market. So the CPI, Consumer Price Index, will measure the changes in the price level for basket of commodities in retail market. Right? It includes both the goods and services. I will give you the list. Have patience. The base year for the calculation of the CPI is 2012. Now let me enter into details of WPI. Details of WPI. The base year earlier were 2004 and 5. Now it is 2011 and 12. How many items, how many commodities are there in the basket of WPI? 697 commodities are there in the basket. Goods are there in the basket of WPI. And earlier when the base year was 4 and 5, the basket had 676. Now there are 697. Sir, why do we change? Why can't we keep the basket constant? Why do we keep on changing? Let me ask you a very simple question. Do you think now you should be worried about what is the price of floppy disk? Simple question to you people. Please let me know. Do you think now when we calculate what is inflation, we should be worried? We should consider what has happened to the prices of floppy disk. Some of you might be wondering what is a floppy disk. Right? Basically floppy disk earlier we used to use the storage capacity of floppy disk was 1.4 MB. 1.4 MB. Today, nobody uses floppy disk. I'll ask you one more question. Right? Should you be worried about what is the price of Nokia 1100? Please do let me know. Should you be worried about what is the price of Nokia 1100? Answer is no, you should not be worried. Why? Today, these kind of products are not used. But don't you think today you should be worried about what is the price of a mask? What is the price of, let's say, green tea? Right? What is the price of a sanitizer? Etc. I hope you understand. I hope it makes perfect sense to you. Sir, why are you giving these examples? Answer is from one time period to another time period. From one time period to another time period, what kind of goods and services are traded in the wholesale market? What kind of goods and services are consumed by the people? The combination